Afternoon. This is the big one. We got the Fed meeting that we're going to be covering here today, and all of the fallout and uncertainty as far as what's ahead here now for the coming meeting in June. My name is Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal every Thursday is to bring to you the market news, data, trends we're watching. Hopefully weed out some of the noise along the way. So I hope everybody had an amazing weekend here recently. It was almost 80, or actually I think it even crossed 80 in Bellevue. So I hope everybody was able to enjoy the sunshine a little bit and gear up for what has been quite the media and news story driven week here with the Fed announcement just yesterday. Before we get to the Fed, let's talk a little bit about some inflation and jobs numbers that likely have an impact on what the Fed is looking at here. So going back to last week, on Friday we had PCE and core PCE numbers come out. PCE numbers were actually slightly down, from last month, I should say, to be very clear. Still growing, but slightly down from last month. But core PCE was actually right in line with expectations. And actually, the annual core PCE year over year number actually ticked up slightly. So this was obviously probably a factor in the Fed's decision here just yesterday. The PCE index, to be very clear, the Fed watches the core PCE because the PCE index includes food and energy. Core PCE basically takes those two out. So, here we are early May 2023, and oil prices have actually dropped significantly on speculation, essentially, of a slowdown. Whether we actually see that oil demand slow or not, we'll see, but we're going into summer months. So that is not typically the case. But regardless, that has kind of been the case as we've seen oil prices kind of drop recently. And if you take that out of the mix, again, core PC is actually ticked up slightly year over year with this most recent number. This Wednesday, we had ADP employment report come out, shows that we added 290,000 jobs last month, which obviously would lead to a more aggressive Fed, knowing that the jobs market is still solid. That said, as you know, we cannot really take this ADP employment number too seriously quite yet. It has been very different from the data that we get on our Friday jobs number, and that one, we'll pay a little more close attention to. So Friday, join us next week on Friday. This week, we'll get the non-farm payroll number, and we'll talk about that next week in our update as well. Today, we had initial jobless claims come out, which kind of goes against this ADP employment report because initial jobless claims actually ticked up again slightly here this week, which I believe is the fourth straight week, if I'm not mistaken. So we have seen slight, but nonetheless, tick ups in initial jobless claims each week too. But the focus, of course, today is all about the Fed. So just yesterday on Wednesday, we had the Fed decision and the press conference. The short of it is the Fed did decide to hike 25 basis points, which again is 0.25%. The Fed made it very clear that they don't see any rate cuts to come. I think the market has been pricing in not only a pause in rates, but also the fact that the Fed would cut rates this year. And Fed Chair Powell made it very clear that that is not necessarily the case. I think personally that they left this next meeting about as open as it can get. Now, a lot of the media and the news is saying that the Fed basically suggested they're done. I got a little different version of that personally, because he basically committed multiple times to the mandate, which is inflation and employment. He said those are the two factors they're watching, like that is everything that they're focused on. And in reality, inflation is still high and employment is still really strong. So if they're not worried about employment, that leaves only one thing to really pay attention to, which is inflation, right? And obviously, just based on the numbers Friday, we're still seeing challenges with inflation numbers. If that is the reality, if they're really only focused on their mandate, which are those two items, and we get more inflation data in the next month that is, not showing clear signs of coming down, I think they wanted to leave that option on the table. So it was difficult because I think basically in the same breath, they would say they'll hike next meeting and literally just right after say that they're done. So again, my personal takeaway is that there wasn't a lot of clarity on what the Fed had shared. But basically, we saw the market pull back towards the end of the day yesterday. Market's down today, and so again, I think most of that is not necessarily tied to the next meeting, but rather the fact that the Fed said they're basically not going to cut at all this year. to forecast out 7 months might be a little difficult, as we have seen with the Fed in the past. They get things wrong and then, have to go back on things. But nonetheless, they made it very clear they don't have plans to do that. And what I will share is on the June meeting, which I think could have a big impact on the markets because most of the media is suggesting where we're at. The markets are suggesting that the Fed is done. And so here we come in June, and if they do hike, as you might imagine, that could cause some volatility, to say the least. Now, it doesn't mean let's panic, right? Because we've got a month until that meeting. And in fact, what I would suggest is next week we get the CPI data on May 10th. So definitely tune in next week. We'll break that down as well. But if inflation is still running somewhat high, this could be kind of that first sign of what may be to come in June. And then right after all this, the ECB comes out today on Thursday and says, we're not going to stop. They're going to keep hiking. And Christine Lagarde was very, very clear on that. So kind of mixed signals from different aspects of the world's economy, but nonetheless, we'll see what comes on the 10th. Again, my take is a little more up in the air than it seems like most of the media is focused on today, and mostly because he made it very clear time and time again they're focused on their mandate, and as long as jobs are strong, that only leaves one other piece of the equation. So May 10th, again, CPI data will be very telling, and that will be kind of our first glimpse at what may come in June there. So one of the things I want to touch on just real quick before we move into the question of the week is that we are going to be breaking all this apart. So on Thursday, May 18th, we are going to be hosting a free online learning where we're going to talk more in a much more detailed version of where we see this path going. This will obviously be after some of the inflation data as well. So we'll be able to kind of lay out what we see as far as the Fed path ahead, what that means for the market. We'll also talk a little about the banking crisis and what's going on there, which will feed into the question of the week, and also, everything going on with layoffs, what that means for you and the economy. So I'll put the link in the comments. If you can follow that, you can go ahead and register today, and we'll plan to see you on the 18th. In the meantime, next week, we've got, again, obviously CPI data, but we also got non-farm payrolls coming out tomorrow. So jobs and inflation, right? The two of the mandates. So definitely some important data coming out in the next week or so. We'll make sure to cover that next Thursday. But it's going to be a first tell at what may come in June there. Question of the week is actually from Manju. Really good question. This is from a little ways back, but I wanted to bring it back today because the question is basically like, what is the banking crisis impacts, and do we expect this to continue? The reason I wanted to cover this today is because now the banks are back in the news here. You may remember from my question originally on this, what I had kind of shared is that we felt like there was going to be some ripple effects, but we did not necessarily feel this was a system-wide issue. And I would still echo that same opinion. So with these challenges, what we saw is, number one, a lot of aggressive greed, I guess, in the system in terms of trying to get returns and buying these bonds, and mismanagement within the banks. On top of that, obviously, Fed raising rates as fast as they ever have has certainly had an impact on that. But nonetheless, obviously, these things could have been seen coming too. So I think that where I'm going with this is that I think that there were a few bad apples, and obviously that has kind of started to show signs of some cracks again here. But this was kind of what we had expected. I think we will continue to see these ripples from time to time. I don't think this is the last time we'll see another bank, in the headlines. But I don't think that it is a system-wide issue. I think that especially the bigger banks, maybe unfortunately, maybe fortunately, depending on how you look at it, are number one, much more conservative with some of these things typically, and number two, much more liquid and able to handle these types of challenges. So likely what we will see for months, I would say, not just weeks, for months, is, we may see a bank pop up here and there with a news story. And I think we will see a lot of change in the banking industry, a lot of acquisitions, a lot of mergers, a lot of, consolidation is probably the best word in the banking industry. But I don't feel that this is necessarily a system-wide issue. Obviously, time will tell, but, nonetheless, obviously the banks are back in the headlines. And, it's an important topic to cover, but this, I think, should be expected for some time. I think we will continue to see these one-offs. So very good question. And I'm glad to kind of come back to that here today, because I think it's very relevant. Again, we'll be talking on that, as well as the Fed's path ahead coming up on May 18th. So I'll put the link below in the comments. Go ahead and follow that to register today, and we'll see you then. In the meantime, have a great upcoming weekend. Happy Cinco de Mayo tomorrow, and we will see you next Thursday at 3.